Hello, I'm Jerry Romine, and in this video I'll be teaching you how to sell a bull-put option spread with a detailed example, plus I'll walk you through how to place the option order. Bull-put spreads are also known as put credit spreads or short put spreads, and they are all the exact same thing. This is both a bullish and an income strategy, and I will show you how to do both today. This is the 6th video in my option series, and these are what I call the option basics. If you're brand new to options, you'll want to watch my other option videos, or at least pause this video to brush up on the basics. Next, we've got the option Greeks, which are a set of mathematical calculations designed to help investors assess risk. The Greeks allow for the measurement of the impact that changes in various factors, such as time and volatility, have on an options contract. Pause this video if you need to review the Greeks. What is a bull-put spread? A bull-put spread is an income strategy with limited risk, and your gains are capped to the upside. And it's really important. You want to have a long-term bullish outlook for the stock. We want the stock to close above the strike price of the puts sold, which allows both puts to expire worthless. This is also a limited risk strategy that can generate steady income. While it may not be big money, it can definitely provide steady income. Our maximum profit, the potential is limited to the net premium we receive, and our maximum risk is limited to the difference between the put strike prices times 100 shares less the premium that we receive. Let's go over our bull-put spread criteria, and this is if we want to keep things really low risk. Our strategy goal is to collect option premium and limit the risk. Our ideal stock price forecast is going to be neutral to a bullish price action. The time frame varies. The further out we sell, the higher the risk and the higher the premiums. Number 4 is what strike price to buy. Now, I like for this strategy the negative 0.08 delta for low risk income, and I'll show you that in just a minute on the charts. Number 5, what price strike to sell. Normally, we want to go 1 to 2 strike prices higher, and this depends on your risk tolerance and your bullish outlook. Number 6, the closer you go to at the money strikes, the more bullish you should be. And number 7, this is the strategy of choice when the forecast is for neutral to rising prices and there is a desire to limit your risk. We learn best by doing, so let's walk through a detailed example, and we'll start with a sample Discord trade alert, which gives us all of the information for selling a bull-put spread. In today's example, we're going to use Tesla, and I like this stock because number 1, it has high option volume and is very liquid. Number 2, the option spreads are normally pretty small. And number 3, the option premiums are big enough so it makes it a worthwhile strategy on this stock. Here's our sample bull-put spread. In my Discord, I try to give you everything you need to know. So it's going to start off as risky. We're going to sell the Tesla deep bull put spread. Our full profit is if the stock remains above the put price that is sold. Our expiration date is going to be May 13th. Our strike prices, we're going to buy the $740 put, which is out of the money, and we're going to sell the $750 put, which is also out of the money. Our break-even price is $749.25, and this will allow the stock to actually go down 14%, and we would still be a break-even. Our maximum profit will be $75 per contract. Our maximum loss is $925 per contract, and our odds of being profitable are 94%. The reasons we are doing this is we expect the stock price to stay higher than the put we are selling, and we want income with limited risk. This goes over our strategy that we just covered, and this is our profit and loss diagram. Now let's jump into the Thinkorswim trading platform, and I'll show you step by step how easy it is to sell a bull-put spread. And if you use any other trading platform, the process will be similar. We're now in Thinkorswim. We're looking at Tesla, and to sell the bull-put spread, all we want to do is come over here and we're going to click on the trade button. Then we have to select our option chain. We want to do one that's 1 week out, so we're going to select the May 13th, and then you want to make sure that your strikes are set to all so you can see all of the different strikes. And we want to come over here to the put side. We look at the delta, and we're going to scroll down until we can see that negative 0.08, which is right here. Then all we do is we're going to come over and we're going to click on the buy button. And then in Thinkorswim, if you hit down the control key on an Apple, you can come over here and click on the sell button, and that creates our vertical right here, which is our bull-put spread. And then our next step, we can bump this up just a little bit. So let's move this up to 0.75, and that makes us a little bit more money. Then all we do is come over and hit the confirm and send button, and this pulls up our order confirmation dialog box, and this just goes over our entire order. So our order description is we're going to sell 1 vertical of Tesla, the weekly, May 13th, and it shows the puts that we're buying and selling. Then our break-even stock price is $749.25. Our maximum profit is $75, and our maximum loss is going to be $925, and that's all there is to it. Is it worth it for the income? Let's assume you do this every week for 1 year. Your weekly profit per contract would be $75. Your annual profit per contract would be $3,900. Your ROI is infinite, and that's because you start with a credit each week. And our risk on this is low. And then I've got a standard disclaimer here. This is a rough estimate. Obviously, the prices will vary every week. And that's how you sell a bull put spread. It's really an easy strategy that limits your risk and can provide steady income. And one nice thing about this strategy is volatility has a limited effect on your profits. I made this video so you can understand the strategy and know every step of the process. If you got anything out of today's video, please give it a big thumbs up and let me know what you think in the comments down below. And this video is also part of an option series I'm creating, so be sure to subscribe to the channel so you don't miss the next video. Thank you so much for watching. My name is Jerry Romine, and I'm an active investor, plus I have a Discord where I provide stock and option trading alerts, and that link is below if you want to check it out. Thanks again, and I hope to see you soon. Peace.